World reserve currency is the dollar. The dollar's been the world reserve currency since just after World War I. And in different forms, the dollar is getting stronger, not weaker. But there's another aspect of money. It's store of value. If I had a liquid fungible asset that was a store of value that I could give to my children's children, well, nobody thinks that's the dollar, and nobody in the U.S. thinks it's the dollar. Rich people in the U.S. don't have 50% of their assets invested in dollar bills. And what they do think it is in the modern world is they think it's the S&P index, like the Vanguard 500 or SPY or some index fund. Or maybe they think it's real estate. And real estate's a store of value, but it's not liquid and fungible. So it's a little bit different. It's difficult to swap it out in units of $1 million every day. And so it's not quite money, but it is capital in that regard. And gold for 5,000 years was kind of capital. It was a bar of gold bullion was that long-term store of value asset that people use. Bitcoin is emerging as digital capital. And people, they're not going to use it as a medium exchange to buy a cup of coffee. But if you want to buy something to give to your granddaughter that she can't mess up, even though she's 3 years old, and you don't want to worry about it every day, and you don't want to trade it, and you don't want to worry about antitrust and whether or not there'll be rent control on the building or renting it out, you just buy her one Bitcoin and you put it in cold storage, and then 60 years from now, she'll be rich because the one Bitcoin will probably be worth 50 million or $100 million, right? And so that what's going on right now is the emergence of Bitcoin as a digital capital network for the world. And the thing driving it from 100,000 to 13 million over the next 21 years is the adoption of it as a capital asset by people that have the wealth, have the capital.
All right. A lot of people in my audience are not going to understand why you can't just store your money in dollars. I have a whole tirade about it, but I'd love to hear why. How do you explain to people why you can't just put your money in a bank account or under your mattress in dollars?
The simple answer is the supply of dollars expands about 7% a year, every year for the past 100 years. And what that means is that if you want to buy something that is a very scarce, desirable asset that the government can't make more of and that manufacturers can't make more of, if technology and capital and machinery and robots can't make more of it, it's scarce and desirable. Here's an example. An acre of beachfront property in Palm Beach, or a beachfront house in the Hamptons, or waterfront property in Miami Beach. That's a desirable place to live. You can't make more of it. And if you go back 100 years, you'll see that the value of that acre was $10,000. And you go forward 100 years, and that is about $10 million. And for those who are very quick at math, they'll realize that works out to 7% increase in price every year for 100 years. And that's why people buy houses for $100 million on the beach in Palm Beach. And my house, the house that I'm in right now, it was sold in 1930. And I have the deed on my wall. And it was sold for $100,000 in 1930. If you'd put that $100,000 in a vault and you kept it safe and sound for the 90 years, and if you took it out, it would pay about 8 to 12 weeks of my property tax on this house. I couldn't keep the house for 8 weeks. Go ahead.
Let me say it in my way. Tell me if this resonates with you. The reason that you can't store your money in cash is that the government steals your buying power by printing more of it. I find it's very sobering to look at it as theft. Does that resonate with you, or do you think I'm being hyperbolic?
No, you're correct. In essence, the inflation of the dollar supply means that your wealth is cut in half every 10 years if you hold all your wealth in cash. And it's the rule of 72, right? You divide 7% into 72. That's the half-life of the asset. So the half-life of your wealth is 10 years if you store it in cash. If someone gives you an asset you can invest in that goes up 7% a year, you're keeping up with inflation. You're not getting wealthier, but you're not getting poorer. You're just treading water, and if you're beating that hurdle rate, then you're getting a bit wealthier. So once you understand that, you can see that you can't preserve your wealth for long periods of time in a fiat currency. And the best fiat currency in the world, Tom, is the dollar. But in most other currencies, they inflate at 14% a year. And that means the half-life of your wealth is 5 years. But in a weak currency, like in Turkey or Syria or Iraq or Venezuela or Argentina, it used to be for 20 years, the inflation rate looks more like 28% a year or 30% a year. And we take example, the peso. The peso went from 1 peso to the dollar to 1,000 pesos to the dollar over 20 years.
Jesus.
Okay, so in America, you got to keep in mind, you're an American. You live in the greatest country of the last 100 years. America won every war, right? We were the winner of World War I. We got richer. We were the winner of World War II. We never lost a war. We were the winners of the century. Our currency lost 99.9% of its economic power over the 100 years. But if you went to Nigeria or like Germany, the currency crashed like 2 or 3 times, right? In Japan, the currency crashed, In Russia, it crashed last time the Russian currency crashed in 98. The Brazilian currency crashed completely 25 years ago. The Argentine currency crashed about 4 times in 100 years. So if you're an Argentinian and you're 30 years old, you already know what it's like to have hyperinflation because you lived the entire cycle. It's just Americans don't. And so if you're taking advice from an American business person like Warren Buffett or Charlie Munger, well, I mean, they didn't live through the Weimar Republic. They didn't live through the collapse of the current. By the way, the currency collapsed in Venezuela. It collapsed in Argentina. It collapsed in Brazil. It collapsed in Cuba. It collapsed in Russia. It collapsed in every single country in Africa. You see? And so foreigners actually get it a bit better, right? It's like the bank's going to take your money. The currency's going to zero. The government's going to promise you it'll be okay and tell you to put your money in the bank. Then they're going to inflate the currency, freeze your bank account, crash the currency, and then tell you it's worthless. That's what happened in Cyprus not too long ago, if you want to go and Google that. And so the real promise of Bitcoin is very simple. It's a bank in cyberspace that won't steal your money. And it's an asset that you can store your life savings in that nobody can debase or corrupt. And those are 2 powerful promises for the first time in the history of the human race. No one ever gave you those 2 promises ever before now.
Yeah, the thing that, and a lot of this started with me getting to know you, researching cryptocurrency, realizing the just absolute devastation that even in America is happening with inflation, and understanding this difference that you're now talking about in a really clear fashion, that until I started researching you for this episode, I'd never heard you delineate it this way, that money is bifurcated into those 2 elements. You've got the money that you spend, cool, but then you've got the money that you're trying to preserve your wealth over time. When I tell people the way you should think about your house is not something that's going to go up in value over time. You should think of your house as something that you pay an insurance policy against, the upkeep, the property tax, as a way to match inflation, which is unless your area becomes disproportionately desirable, and that does happen. So like Austin went up in value because people just flooded into that area. But for the most part, what you're going to see is actually just keeping up with inflation, that as the dollar is devalued, it looks like the price and the value of your house is going up, but it's really not. Now,
I think that's fair, by the way. I think that's definitely a good way to think of it.
Yeah, I think so. My own company, when I start talking about this stuff, my employees look at me a little bit like I'm crazy because I'm so aggressive about getting people to understand, and it'll be very interesting to have this conversation with you, that ultimately the stock market is gambling. And once you understand that people have been forced to become gamblers based on inflation, that you have to find a way to outpace inflation, otherwise you lose your money. And the really smart among us look at the capital system, look at the equities market, and they go, oh, cool, I have a really complex way that I can find arbitrage basically in these moments where if I find an area of risk that I think I understand better than the next person, I can come in, I can buy that asset, it goes up in value compared to what I can sell it for down the road, and I'm able to sell it for a bigger win than inflation. And that forces everyone to play that game or to just have their buying power stripped away from them, which of course is what happens to the vast majority of, call it normal to undereducated. They're just going to get eaten alive because they don't have the time, energy, or intellect to figure out this relatively complicated game.